Hello, everyone. This is me, Guillaume, with here Nathan Burks from the Panoptic research team. So this is Beyond the Greeks, research bites by the Panoptic team. We at Panoptic are creating an options protocol. Options can be difficult to understand. There's many layers of complexity. So we try to peel off the different layers and make it as easy to understand as possible. We do this with showing how to trade, and this is the live trading shows we're doing. But at the same time, we do some research pieces which are a bit more advanced, a bit more kind of research in terms of what they provide. But overall, just to give you an exposure to the retail users and the listeners here, how kind of options can be part of your portfolio strategy. So nothing here we say is financial advice. You should not take this as a way to guide your trade. This is just for informational purposes. And yeah, so last week we had something about volatility, comparing volatility on Deribit and Uniswap. Very cool piece by Amy Khaldun from the research team. So this week we have Nathan Burks here. So Nathan's been with us since the summer, last summer. Why don't you tell us a bit more about yourself, Nathan?
Sure. Have a background that's pretty different from Amy's, the previous researcher. Specialized in financial econometrics. Really, that's really my academic training, and from there went into TradFi, proprietary trading, and HFT. Sort of got an introduction to the practical aspects of volatility trading in Chicago, but which is really the birthplace of volatility trading. But since then, have been keen to get in on DeFi innovations because the TradFi market's crowded out. So that's what led me to DeFi several years ago.
Amazing. Yeah, a lot of folks feel maybe the same way, whether it's seems to be limited access to underlyings that can trade, seems to be not rigged, but there's definitely bigger players that can sway the markets. It's, I mean, meme coin and everything kind of highlight this, but there is a big boys game, and again, the retail can put a dent on it. Here we're here in DeFi to reinvent the whole system. So not to crash and burn it, right? What we've seen with meme coins, but rather building better, more resilient, and also kind of more sustainable. So the way this works is that Nathan will go over his research piece. Actually, let me share it. This is a tweet that was published last year. So overall, this is the doom loop, a very cool and interesting phenomenon that you will see a lot with Uniswap, and with Panoptic, we have our own kind of solution built into it. This is again a research bite that is published, so you can dig deeper and kind of read all about it on our blog. But for now, we just try to package it in a short 15-20 minutes so that people can now get it and understand it. So without further ado, I'll have Nathan describe again the Panoptic battles, the Uniswap Doom Loop piece.
Yeah, just for a little intro, this was a meme that you created, Guillaume, but I mean, it goes through really the chronology, like have how informed traders constantly pick off retail. In TradFi, it's through HFT. Um, in DeFi, it's through LVR. But Panoptic really does a solid job of turning it's on its head, turning these advert selection opportunities on their head and allow the retail user to take advantage. But first off, what is the doom loop on Uniswap? Well, what's key to understand is if you're an LP on Uniswap, there's a directional asymmetry when you rebalance. What do I mean by that? Well, if you have a price range that you're deploying liquidity into and you go to the lower bound, say in the ETH USDC pool, your position is going to be converted to ETH. But if you go across the upper range, it's going to be converted to USDC. So this is kind of similar to Deribit, where you have coin margin deposits. So if you trading in BTC, you have to have BTC deposits or ETH or et cetera, et cetera. Except so there's this continual feedback loop to the upside or to the downside on Deribit inherently, but on Uniswap, it's only to the downside. So what this does is when you rebalance as an LP, it continually feeds downwards and downwards and downwards on itself. Um,
And
which
basically,
leads,
for the key thing that's happening is that you have an LP position. It's maybe 50-50% ETH and USDC when you launch it. If the price collapses, you're stuck with ETH. So the price went down and you have to sell that ETH back to USDC, right? So you're
Mm,
contributing to that price move because you have to exit half or even
exa
all of your position and sell further.
exactly. And that's a dilemma that you don't have to face on the upside. So with Deribit, you have liquidation cascades to the upside or the downside. Here, it's just the downside where you face that issue. And so, what does this empirically lead to? Well, really, it leads to Uniswap LPs being akin to perpetual put option sellers. I mean, this is really Panoptic's mantra. I think we should print this on T-shirts and distribute the T-shirts at ETH Denver to hammer this into people's heads that statistically it is the same. Visually, it bears out this way that you are selling a put option because of that downside property in perpetuity. So that's really the difference with adverse selection in TradFi versus DeFi, how LVR and permanent loss, et cetera, present themselves. In HFT, if you place a limit order like on a CLOB, um, there's no inherent optionality to like a limit order. Whereas in Uniswap and most AMM architectures, there is inherent optionality. So people should be aware of that. But what does that mean when it's basically akin to selling a perpetual put option?
And some people also are mentioning that, oh, you sell a put option for free or it's a free option.
Yeah.
What do you make of that take?
Yeah, it's not free. You're gonna pay for it eventually.
Oh,
Um,
you get paid, right? So the
because
fees you collect is your premium, basically.
true, but it's in a very narrow scope, which is what I'm going to get to next time.
Hmm.
Or in the next slide, because say you are selling a put option. Okay, you collect the initial fees. It's a free option on the surface. But as time goes on, I already mentioned the paradigm where there's intrinsically further downward pressure. Well, if you're selling an option, you have negative gamma or negative convexity. So you're continually chasing the market to hedge your position to maintain delta neutrality. That's what you'd be doing with an LP position as well. So as the market keeps going downward, downward, downward to rebalance, you have to sell more and more of the underlying token to keep your LP position hedged. And that's what this chart really shows is the hedge line is downward sloping, meaning as the position moves further and further to the left on this x-axis, you have to sell more and more and more to maintain a hedge on your position. Same theory applies to Uniswap LP. So you do collect upfront fees, I guess, in terms of in immediate terms, it is a free option, but you're going to pay for it sooner or later.
And yeah, the delta zero, the typically when you're managing an option or another book, you want to limit capital exposure. And if you go back
Mm,
one slide, the key point is that you want to
yep.
have the current price where it's traded. If it's 900, you want this to be flat and delta neutral. And it's a balancing act a little bit. The more it goes down, the more you have to kind of revert that trend. And if it goes up, you go the other way. But because
Mm,
it's going down, the way to revert is to sell more or short it. So it's kind of that self-perpetuating kind of sell
yes.
pressure that exists.
Hence the doom loop.
Yes,
Yeah, it just
exactly.
keeps feeding and feeding and
And
feeding on
people see
itself.
this in TradFi too, right? Like in Gamma Squeeze is one of the example of this, right?
Yes. Yeah. Well, what I alluded to earlier on Deribit is a gamma squeeze, like an inherent gamma squeeze, just by the way the exchange is designed, having coin denominated deposits. So when you're collateralized in those deposits, um, you have to sell if the coin's tanking, as an example, you have to sell more and more and more of your collateral so you don't get margin called. So it just and more and same to the upside. Um, Now going to broader observations with the doom loop, um, as it relates to the doom loop. Um, Panoptic, I mean, is an options trading protocol. People get queasy about options trading being tied into LP positions or layered on top of LP positions. But what you have to put it in the broader context of what we've seen in TradFi with the insertion of derivatives markets. Derivatives have been shown to dampen underlying spot volatility in TradFi markets, as well as completing spot markets from the standpoint of every possible position can be hedged. And right now we don't have that in Uniswap LPs. Like I said, um, it's a perpetual put option being sold short. There's no way to turn that on its head except through Panoptic. Another misconception is that long only markets will continually buoy your price. Well, really, what that does is just open you up for arbitrage opportunities. It creates the exact distortions that you're trying to mitigate. Um, through put call parity, through circuit breakers. There's historical evidence to this. The short sale ban in 2008 on financial stocks, limit up or down events on futures. It ended up directionally accentuating the exact price fluctuations they're trying to stymie.
So the you say
Um,
inefficient markets, it would be more volatile, or people would have worse pricing, or what's kind of the outcome of having long
Yeah,
on?
yeah, both. It actually ends up being a self-fulfilling prophecy of what they're trying to prevent, they actually end up initiating with
Okay.
volatility, with more distortions in the market, because you don't have those arbitrage funds coming in to keep prices actually in line. Um,
So we see
and
this a little
really,
bit too with Uniswap. A lot of folks talk about MEV and arbitrage trades, and this is kind of a very important aspect of AMMs. And because it's not an order book, every trade has to be kind of realized, and this needs to be arbitrage. So you can imagine someone saying, "We remove all MEV bots or remove all arbitragers." It's easy to see that the price would be extremely inefficient. There would be
Mhm.
inefficiencies between the AMM price and the centralized exchange price. So the role played by MEV bots and arbitragers is beneficial, net beneficial for every participant. So similar to the derivatives, it's just a way to wrap an extra layer of complexity, but that evens out all of these inefficiencies.
Yeah, absolutely. And really, I want to go back to the concept of complete and incomplete markets for a second. When you introduce derivatives, it's an alternative channel to gauge supply and demand of buyers and sellers. When you think about the market clearing price and economics, or on trading on a CLOB with top of book liquidity with the lowest ask and highest bid, you're seeing those forces in real time, but they're not going to be fulsome in revealing information unless you have all these different channels. And the chart on this slide is Panoptic's spread multiplier distribution as of a few days ago. And what this reflects is like for 1.0 to 1.5, that means you're earning 10 to 15% more if you're LPing on Panoptic versus Uniswap. So that's where the main concentration, and that's really a gauge of demand for optionality. But that's not going to be reflected in an incomplete options market like Uniswap. You have to come to a venue like Panoptic.
Yeah, and then so I'll try to unpack this, but the spread multiplier, I don't know if it's the best term as well, but the long only analogy in the spot market leads to inefficiencies. You can only buy something, like even GameStop
Mm.
for a while was just close only. So it does change the nature of the trade, and going long only in spot adds more volatility. In Uniswap, going sell only or providing only also has its own shares of inefficiencies. And that's kind of the key thing that Panoptic unlocks. But if you can only sell or provide liquidity, then there's going to be an oversupply, maybe there's going to be some inefficiencies. You need to be able to short or borrow or take the other side of that trade. If the fees are too low, you could short that position and short put becomes a long put, and you are benefiting because the fees are low. So that's kind of the way we open up the market, make it more efficient. And what we see here in the spread multiplier is that because you take the other side, fees are X, it may be too low, so you can borrow it and pay a tiny bit more than the fees. And that's kind of where the market will find an equilibrium. For
Yeah.
instance, most of these LPs that are buying options are okay paying 15, 20, even 50% more than the fees because it's still cheap for them. So that's now finding a new equilibrium price on the options that are generated on the volatility. The more buying, selling will find an equilibrium, will make it a lot more consistent for LPs. And this is kind of the even if we've been launched for 2 months now, we've seen a lot of those inefficiencies in the multiplier. We created a trade on Monday, which was or on Friday, which was capitalizing on that. Some strikes are heavily bought. As a seller, you can sell and make 2x more than the fees on Uniswap, which is humongous if you compare to the returns that you would get normally on Uniswap.
Yep, absolutely. And the next slide actually reflects your thoughts on that. When our average spread multiplier was higher, these were some tweets you had on January 23rd, which was that like our average um, spread multiplier at the time was around 1.225. And as you point out, you collect around 22% more LPing on Panoptic versus Uniswap. I really appreciate that you or 22.5% more, but what I appreciate is that you mentioned like a natural equilibrium. The natural equilibrium is being stifled when you have these incomplete markets. So, uh, and you point this out in your tweets. If anyone wants to go back and reference them, it's a true gauge of demand. What we're allowing is this is the optimal allocation of demand in real time for fees or optionality, buying optionality. So Panoptic opens a window that just LPing on Uniswap does not.
Yeah, and remember, we're built on top of Uniswap, so liquidity still ends up there, still gets
Mm,
routed, still is part of that broader ecosystem, but we're just kind of creating that new market that did not exist before. And again, Nathan coming in from the TradFi world, it's not often that you see new markets appearing once every decade,
mm, mm,
perhaps. Here, that might be kind of one of the an example. Same thing with AMM opened up. AMMs opened up a new market for spot. Panoptic also opens new
exactly.
markets for options while trading, that type of market too.
And this is more of a rhetorical question on the last slide, but what are you waiting for? We've mentioned all the benefits, but really, versus
Boom loop. I
Uniswap
like it.
LPing and
Yes.
Panoptic LPing, it's been shown many times, okay, it's a short volatility position LPing on Uniswap. So you're confined, you're constricted to a narrow profit range if the token price doesn't move that much. Panoptic, you can do whatever you want. And going back to arbitrage funds keeping things in line, we already have um, spot futures parity via crypto spot and perps, but there's no way to take advantage of synthetic perp arbitrage until now by longing a perpetual call and shorting a perpetual put or vice versa. So once again, keeping the prices in line. You can do that with Panoptic, can't do it with Uniswap. Um, and also trade those gamma traps. You mentioned the gamma traps earlier. Now on Uniswap, it's an intrinsically downward pointed one. It's asymmetrically skewed to the downside, but the but say if you have one like the GME gamma squeeze of a few years ago, where it was where market makers were trying to hedge their short calls. This is all easily more tradable on a place like Panoptic. So really just between optimal market clearing of fees, being able to profit in times of volatility, bringing in more arbitrage flows. Um, these are all windows that are open via PLPing, passive LPing on Panoptic versus being on Uniswap. So it really opens up several different labyrinths that you can capitalize upon.
Exactly. And I think that's the beauty of Panoptic. It's extremely versatile and generalizable. You could be a niche trader to do one thing, and there's 25 other strategies that aren't necessarily competing with us, but just creating a different type of trade. And it that the goal of these uh, pieces is to make them available, make them so that people can watch and rewatch them if they want to understand the subtleties of options trading and kind of these type of arbitrage, and also how retail users can trade options as part of their portfolio of kind of strategies, but also funds, treasuries, DAOs. Will kind of talk about these features, use cases, the products that can be structured using options. Again, it's humongous in TradFi. Again, it's easy to say it should be humongous in crypto, but no, it's actually a paradigm shift. Also, how these instruments work. So, thanks a lot. This is a great slide. We'll probably tweet this as well. It's very clear to some extent how Uniswap LPs and Panoptic LPs are one and the same, and there's definite advantages on the Panoptic side, and then most of the Uniswap LPs could also kind of open up way more opportunities by being on Panoptic. So, all right, was it the last slide or
Oh,
there was
oh,
one? Yeah,
oh, no, no, no. This is the last slide. I was just going to go back a few slides. These broader market observations, if you want to look at the TradFi parallels, don't take my word for it. Go into the research bite on the research blog with the Panoptic website.
yeah,
Yep.
perfect. So I think I pasted it on YouTube, so it's going to be there forever. For some, I can do it on Twitter, but overall, yeah, this was it. So this is great. Thanks a lot. Yeah, Nathan. Again, we'll do these once a week on Tuesdays. We do these research pieces. We have the trading shows Monday, Wednesday, Fridays. We have the analytics and top trades of the week on Friday too. So overall, again, we try to keep people engaged. If you have questions, you can ask Nathan directly on Twitter, on me, or go on our Discord. More than happy to kind of help you see the light and start considering options as part of your trading activities. And yeah, for now, any last words, I guess, Nathan, before we adjourn?
No, just a general question, like it asked on the last slide. What are you waiting for?
Yeah.
Migrate now.
Perfect. We're on Unichain too, so gas is not an issue
Mm.
anymore. So overall, great talking to you, Nathan. And yeah, I guess I'll see you around you guys Friday for the options hour and live trading show. Oh, tomorrow actually, options hour.